What is up, everybody, and welcome to this very special episode of the Start Build Grow Show. On today's show, we are going to talk about the good, the bad, the ugly about running a construction and roofing company. The things that nobody talks about very much, and the things that a lot of us are challenged. We are talking about finances. We are talking about books. We are talking about how to run your business by the numbers. And I have two incredibly gifted experts with me that are going to share their story and really pour into you as a business owner. So you're going to want to stay tuned. All right, welcome in. Man, it's hard to even explain the level of importance and the level of appreciation I have for these two amazing women. And I have our lead financial coach and our lead coach for the Roofing Academy, and they both have an incredible amount of expertise and value to share with you today. And I'm so excited to have you both. Thank you so much for joining me.
Yeah, thanks for having us.
Yeah, thank you.
Okay, so in traditional fashion, let's get to know you a little bit here. I'm gonna start with Jenn. Give me a little bit of your background and some of the things that you've done and studied and learned and certifications, all the things that makes you an expert in the bookkeeping space for roofing contractors.
Okay, yeah, I have about a little over a decade of experience in accounting. I have a background in private industry and construction primarily, but also in public accounting. So I've seen lots of different scenarios. I've served clients, international clients who are like medical startups, from construction to restaurant to retail, like pretty much the full spectrum. I've done a lot of nonprofits as well. But my heart really resides in the construction space. I actually grew up blue collar. My dad and my uncle were partners. They worked together. They had their own business. So I got to see that from the ground up as a child. I even went to a couple work sites when I was growing up. So I actually I've worked with you guys for a lot of that time, actually, in roofing specifically. And recently I've joined up with the Academy, and I've really been loving working with all the clients and digging into the weeds of their systems and their numbers and all their books. So yeah, that's my story.
Love that. And you spent some time really, leaning in QuickBooks. You have, some high level certifications there as well.
Yeah, that's right. I have a QuickBooks ProAdvisor certification. So I've spent a lot of times on the back end of QuickBooks, the customer facing side of QuickBooks. So pretty much all the ins and outs of the QuickBooks software, I've had my hands on to a certain level.
So she knows all the things that me and I'm venture to say a lot of the people listening to this, you already lost them when we said the word QuickBooks. Like, oh, I'm gone. What squirrel? Very, very important stuff. And thank you for showing up. Thank you for being here. And Brie, you've been on the show a number of times. I know you've been around our audience a lot, but for those who haven't had the amazing blessing of connecting and listening to you, what's your background? Give us a little bit of history.
Yeah, well, I started as an admin assistant at Elite Roofing 16 years ago, I guess now. Time goes fast. So 16 years ago, moved from admin to production, and from production into operations. And at that point, I got to really roll my sleeves up and learn the financial side of construction. And I really, really enjoyed it. It came very naturally to me. QuickBooks, for whatever reason, at least the desktop version of it, it just made sense. I thought it was very user-friendly, and I love that you can take these numbers and create context in your business, like real true variables to make decisions on and things like that. And so I don't know. I speak it and I understand it, and I'm grateful for that. And so I really dove in through all these years to learn it. And a lot of my knowledge is self-taught, which is my preference learning style, actually, to be 100% honest, better than a classroom. And so I don't know, it's been a journey. And so the last 10 years or so, just totally engrossed in roofing specific finances. It's a very complex structure in regards to finances, not simple finances. So it's been a lot of fun to learn and grow in it.
Love that. And she's not giving herself enough credit. I mean, she's put both of these women have put in some incredible effort into learning how to master something that is very, very complex. And in the roofing space, the construction space, I mean, it's a lot different than just a transactional based business, you know, where someone comes in, they buy something, they pay for it, and they move on, right? Our business it gets lots of layers of complexity, especially when you start adding in, if you're dealing with, you know, storm environments and insurance companies and mortgage companies and commercial and like payment schedules and dealing with, you know, service work versus retail work versus insurance work versus, you know, all the different types of things and all the exterior. I mean, you say you're doing all the subcontracted trades work, lots of differences. So let me start there. Help us understand the difference between maybe like a traditional accounting model, a traditional bookkeeping model versus a cost plus or a roofing or a construction based model.
Yeah, I was actually thinking about that as you were describing the complexities. That's one of the reasons I actually love and prefer contracting over other business models that I've actually worked in. So if you take like retail or restaurant, for example, you've got money in, money out. It's cash basis, transactional. With construction, there's a lot of accrual that needs to take place to really keep track of everything and dial it in. And by accrual, I just mean you need to keep track of when you're spending your money, not when the money's leaving the bank, but like when you actually incur that expense versus when you start that revenue, when you start that project. So there's a lot of variables that tie into it. And there's a process and a system that needs to be followed for it to be done correctly.
Absolutely. So, you know, and I think a lot of people don't realize that. They just throw it in, hey, let's just figure this out. And let me just, I know I need some books. Let me start my QuickBooks. And there's a lot of mistakes that happen. So we're going to dive into a lot of that. But what is your, you know, take on that? Brie, anything to add on that as far as the kind of just the basic elementary level differences in understanding the two different accounting methods?
Yeah, what Jen said is so accurate. And I would just add on the complexity of just customer-based job costing accounting. You know, when you walk up to a counter and swipe your card, they don't care who you are. You know, they absolutely don't care who you are. And we have to look at our projects on a job level. So just that granularness that we have to dive into in regards to our books, not to add not to even mention the complexity of trade work, you know. So a lot of us owners, or a lot of the owners we work with, they want to see their siding. They need to see their siding separate from their windows, separate from their painting. So if they're exterior restoration, we have to make sure that these side trades aren't pulling money from our main trade of roofing. So there's a complexity there as well.
Yeah. And so here, now I get to be vulnerable here. And when I first started my construction company, we were doing remodels. Okay. It wasn't roofing. It was all things remodel. And I had lots of different trades and lots of different things. And I didn't really know this side of the business. I knew I needed a QuickBooks. Okay. This is way before, I had no CRM. This is all everything on a notebook, files. And I grabbed the basic level, cheapest version of QuickBooks I could get. And I started trying to do it myself. And I literally didn't know what I was doing. So I just put in, okay, all the expenses, totaled them all up, all the revenue, all the cash in, totaled it all up. And at the end of the week, if I had a little bit of money in my account, I'd go pay whatever vendors or whatever subs I needed to pay. And the idea was, hey, did I have any money left over at the end of the month? And I wasn't tracking things from a job costing perspective. I was doing 2-3 jobs at a time and trying to track everything on a spreadsheet. By the end of each job or by the end of the month, it was total guesswork of trying to figure out like, okay, how much did I actually make on this job? And I think a lot of contractors still kind of start that way. Maybe you didn't. It's okay. I did it. And I somehow figured it out by finding great people to help me. But do you see, you know, I say that story because, you know, there's entrepreneurs, we just go and we want to make things happen. And we just try to do the best with what we know. And we learn as we go. And there's a lot of companies starting up. There's a lot of people listening to this that maybe just started the roofing company or started it and maybe didn't and skipped a couple steps. So we work with a lot of startups. We also work with a lot of companies doing 8 figures. But when it comes to getting your business started, how can you avoid some of the mistakes I made as a knucklehead trying to start a business with no experience? You know, what are some key things or maybe some key takeaways or key things you would want to share with somebody who's maybe just getting their business started?
For me, it's one of my favorite things to say about bookkeeping is that in bookkeeping, it's not 2 + 2 = 4. And we want it to. You know, we all went to math class and we want that to be the simplicity of it all. And it's not. It's much more complicated than that. So my advice is like get a professional to help you as you start to navigate through that, because it isn't just entering in your revenue and entering your expenses and getting your net. You have to live in two reports, your P&L, your balance sheet, liabilities, assets. It's just complex. So, it's one of the easiest things for you to do as an organization, and one of the cheapest things for you to outsource is your bookkeeping and your payroll. So I would say, don't do it yourself. Like, get some advice. If you are going to do it yourself, then absolutely get some advice. I've seen some horror things happen in books when people try to do it themselves. And I've seen some business owners pop in and actually be able to do it on a general level pretty well, just like if it was a cash business and it's a clean set of books, but it's still not accurate. So get some direction would be my advice to new people.
All right. What do you got, Jen?
Yeah, and I would add to that as well. If you, let's say you've already started and you've got a system set up, but you kind of have a gut feeling that things aren't quite right, you're probably right. And just know that the system that you set up on day one just isn't built to support you where you are today. Like, you've been through a lot of growth and change and scaling, and all this complexity is built on top of each other. And the system that you built on day one just is not going to support you on year 2, year 5, year 10. It's just not, it's never going, it's always going to be an evolving process of managing and tweaking the system and taking it apart and putting it back together. And that's what I love to do. But just know that, like, when you started on day one, you didn't do anything wrong necessarily. Just maybe you started without the right guidance or the right support.
Yeah. So would it have, it probably, I mean, knowing what I know now, it would have behooved me to start with cost-based accounting, like job costing everything. Can you, for those of us who, don't understand that, can you help me just understand the difference between like job costing and just standard accounting?
Yeah. So for every transaction, you're making a purchase for a specific job, right? Unless it's overhead. We're just talking cost of goods right now. So you've got your revenue. You're going to recognize that revenue the day you start building. Then you have to order materials. You have to hire a labor crew. You have to get a permit. All the things that go into building a job, those need to be costed in your system to that job so that you can track the revenue against the exact expenses that go into building that job.
Yep. Thank you for that, for explaining that. And you can get, and we find this a lot, where a lot of people are job costing, but they're not job costing everything, right? So, one of the questions I ask when I'm working with a new client or something is like, hey, how much, what's your average job size, but also what's your average margin per job? And then when you really start, digging deep under the hood, you start realizing there's a lot of things that aren't being job costed properly. Are there a few things like that you see commonly that aren't being job costed that should be being job costed?
Yeah, absolutely. Well, what I see is a lot of times, a lot of people are making payments online. Those add up really quickly. Credit card fees, there's sometimes they're called merch fees, measurement fees. A lot of times they get put down into overhead expense, lead source fees, for like your marketing expenses that are specific to certain jobs. Those could be job costed. They seem small, even permits. They seem small at the end of the day, but like they really do add up.
Supplementer fees, I've seen that one. Like, people not job costing the percentage they pay the supplementer.
Yeah. Well, and I think that's even a question too. Some people, with commissions, they try to maybe put that as a below the line expense versus an above the line expense. What do you say about that?
Yeah, you lose twice, depending on your compensation structure. So
yeah,
if you're not dotting those I's and crossing those T's, you're not only going to pay for those services, but now you're going to overpay your salesman on the commission.
Love it. All right. So we're starting our business and we want to make sure we're job costing properly from the beginning, right? A great CRM, a great.
I'm sorry, can I say
Go ahead. Yes.
Last question. This one is the one that we argue with clients about the most, and that is commissions.
Okay.
Lots and lots and lots of our owners do not want to put commissions above the line. So when we say above the line, we're talking about gross profit and net profit. So above the line is your cost of goods. So they don't want to put it as an actual job cost. And we job cost commissions.
And why is that? Why do you think that is?
Because why do you think that is? I don't really understand why so much. I think it's because, especially as owners may not know bookkeeping, but what I have found out, what owners do know is gross profit, what my materials are going to cost in percentage, what my labor is going to cost in percentage. So they have these concepts in their minds of what it should be and then your P&L doesn't align with what your brain thinks it should be. And so that commission structure specifically impacts that concept. So it's the same way where we get confusion about overhead. Like overhead's not going to hit your cost of goods. So what gross profit are we going for? So I think some of it is that, like, just the story that we tell ourselves as owners as regards to what percentage we're trying to get, and then trying to force in the finances to bring us into alignment in that. So I think it's just a lack of understanding.
Yeah. And I think we want to put ourselves in a situation where we feel like we're making all the money, and it's like having a bigger quote unquote profit makes us feel better, right? We could peacock better, and we're like, oh, we're running a great business because I got 50% gross profit. But what we don't realize is that if you have a 55% cost, then you're actually losing 5%, or maybe you're only making a couple percentage when you think you're making all this money. And I feel like we run into that all the time, where there's this misperception of profit in this business. Everybody thinks they're making way more money than they actually are. And then when they find out, they think that, well, all I got to do is go sell more, knock more doors, sell more roofs, and I'll solve this problem. But when really there's some core fundamental challenges and fundamental like systems that we need to have in place with our tracking and with understanding the bottom line or below the line activities. Because correct me if I'm wrong, that's where the bleed is. That's where the biggest difference and the biggest challenges for helping contractors understand what their profit margins are.
Yeah, I love that you said that. Your fixed expenses are not as controllable. We can control our overhead from a certain standpoint, but we should be able to expect it. Okay, so if you throw a commission below the line, it no longer creates an expectable overhead. Okay, because it's very specific to the sales. It's very specific to that revenue. So we want all the ones, and then we have levers that we can pull in regards to our cost of goods. Those should be variable. They should be more controllables. What can we do to get our materials down? What can we do to get our labors down? What can we do to get our commissions down?
So I'm going to shift gears a little bit, and yes, we'll dive into some of that, because I want to talk about some of the overhead and some of the things we find, and some of the mistakes and some of the things we see a lot of companies make at different levels of business. But as we're still setting the table of understanding here, I think this comes up a lot. And I think a big mistake that happens when people get started and set up their books is a lot of businesses, like we talk about transactional based businesses, they get set up, but they're told to be set up on a cash basis and not necessarily accrual basis. So I feel like we find oftentimes where we're having to convert companies from a cash to accrual. Help us get a little more context as what's the right way to set up a construction company from a tax perspective as well as from an operational perspective.
Yeah. So usually when you're going into business, who are you listening to? Your CPA, right? And it matters. Like, it matters a lot. You should be filing your taxes on a cash basis. I don't want to get too far in the weeds, but if you filed your taxes on an accrual basis, you would be paying taxes on monies that you have yet to receive. So you'd be paying taxes on money that you haven't even gotten yet. You don't own that money. It's not in your account. So you want to pay on a cash basis. You want that to be true, but it doesn't make sense for your business itself, because we run on different nets. We might have a 60-day net on our materials, for example. And so now we're paying cash 60 days out. That cash is coming out 60 days after we actually incur it. So we want those expenses to align with the revenue, so that month over month, it makes sense. We can actually see where our gross profit was positive month over month. And then when we have a negative, it tells us right away, okay, you have a problem and you need to go look at it. So cash can never give us that information.
Yeah, I've also heard the opinion that it doesn't matter if we set up on accrual because we're going to file our taxes on cash anyway. But that's sort of like backwards thinking. Like, yes, file your taxes on cash, but manage your business off on accrual, so that you know that in January, you had a slow month. But in June, you exploded in business, but you're still not looking as profitable, right? As you might have hoped. And maybe it's because some of those expenses are living in other periods, because they're not being, a lot of the time I see people, they don't post their expenses for materials until they pay at that 60-day net. So they've got their revenue sitting 3 months or 2 or 3 months, in the past, and all the expenses are coming out in the future. And it's going against all the revenue you're actually bringing in the month that you pay bills from 2 months ago. So it's really important to keep track of it in the timing sense.
Absolutely. I think it can create a sense of, false confidence, that you have more than you really do, or you have less than you really do, so it can cause, an owner or someone, someone kind of wired like myself to have more like knee-jerk reactions when we don't have the full picture. We're not looking at things from an accrual, like, 60, 90, 120 days out perspective. We're looking things like, oh my God, right now I have to do this thing to pay for this truck or whatever. And they make these decisions and then they don't realize the repercussions of it that happens down the line. So as we're moving along, okay, we got started, we're getting our books set up, we hired a professional, we're doing it right. Now, let's say we're, been doing business for a few years. We're $2, $3, $4 million company. What are some things at that level that I need to be aware of? Maybe some common mistakes that you guys see. I know we work with a lot of companies that, from 1 to 3 million, our mission is to help, get them there and build the foundation to help them get up to that $10 million mark. Right. So at that level, what are some of the key elements that you guys are seeing quite a bit with all the different companies that you're working with?
Well, one of the things that I've seen a lot lately is a lot of business owners aren't even paying attention to their books at all. They're relying more on their CRM as their a CRM is great operationally. It's great for keeping track of all your jobs, and you should keep a track of all of your expenses in that CRM, but they're not taking into account how it's impacting their books. So let's say they have a surge in sales and they're low on cash because they haven't collected enough to cover all the expenses that are going to come with all this new business they just got. They're going to have to apply for a loan or a line of credit through a supplier or something like that. Maybe they need to get a credit card with a higher limit. The bank isn't going to ask for your CRM reports. They're going to ask for your QuickBooks reports. So the two need to be a check and balance system, but QuickBooks is the end all be all that the finance world cares about, that you should care about. I mean, the CRM, again, it's very important, but the two should mirror each other. If it's being done correctly, they should be the same in both places anyway.
Yeah, I agree with that. And I think just kind of like Jen said, they're not looking at it. I think at 2 to 4 years, especially during that startup period, like we focus our energy on sales and ops, sales and fulfillment, which I think is right. I think that's right and correct. And I think you do need to do those things, but not at the expense of the finances. And I think a lot of times owners put it on the back burner, like it doesn't matter as much. And it does matter as much. And so I think just that awareness of like, okay, this is the third piece. Okay, I have sales, I have fulfillment, and I have finance. These are the main pillars in my business, and all three of them need my attention and energy.
I love that. And speaking to the contractors, to the founders and the owners out there, it's natural for you to want and think that, I got to build a business. I got to sell, right? Sell. Everything revolves around sales and marketing and lead gen and building the front end of the business, which is correct. But that's not everything. That's only part of the puzzle. It's only part of what it takes to build a successful organization. Because not only do you have to figure out how to sell and market and drive sales, you got to be able to fulfill at a really high level. And that's systems and operations. And we have a lot of shows on that. And we have a lot of content on that, but this is not for the show. This is the third part. You have to run your business by the numbers. I know it's cliche. I know you've heard this. You've heard me say it 400,000 times. If you've been to one of our events, we talk about it. Like literally, that's what we do, is like really emphasize teaching people how to do that. But if it gets tracked, if you can track it and measure it, you can make decisions way better, way more effectively for your business. And getting yourself in that habit early and often is going to prevent a wave of issues and challenges and headaches and losses that you're going to suffer down the road if you ignore it. So stop ignoring your finances. Sales, market, great, drive your business. Make sure you have systems and processes for everything in the business, for all the operations, but do not think that, oh, I'll figure out my finances later, or I'll hire a professional later. I don't want to spend money on that. I'd rather spend money on leads than spending money on someone to make sure a professional is going to help me get my books in order. They all three have to work together in order to build a successful, sustainable organization.
Yeah, and I would also add to that, when you realize you're at that position where you do need to hire a professional, be willing to let that go to the professional. Let them do it. And then you just rely on your reports. Know that your reports are being done correctly. A lot of times I see business owners, they'll hire an office manager, for example, to do 80% of the bookkeeping. But then there's like 20% that the owner is still holding on to. And that office manager doesn't feel like they're allowed to touch that part. And it could be still being done incorrectly. Inadvertently, unintentionally. But there's a reason why you're the business owner and you have the people that you're hiring around you to support that and to do it correctly. And so that you have those reports that you can rely on.
And that's another big mistake we see a lot. For whatever reasons we do this, but there's certain aspects, it's money, right? And money makes people funny. And we start a business, it's our money. We run our business that way. And we tend to not be willing to, maybe it's a trust thing. Maybe someone betrayed us and that happens. But I think having a circle and even outside professionals that know what they're doing can help relieve some of the pressure of like, oh my God, who's stealing from me? Or some of the angst that comes with letting somebody into your bank account, letting someone in to your books. By having a tight circle of people, it creates accountability as well. And it also creates an environment where you can feel like and learn that it's not just a willy-nilly thing where I can just do whatever I want with money I want. It's my business, my money, that mindset is wrong if you're trying to build something long-term.
Some might call it just a job, but they don't feel the weight of it. Rain, snow, heat, aching bones, and late for dinner again. But you keep climbing because families count on you. Homes stand because of you. And that's why we built Peak Performance, the playbook for progress. Real numbers, real insights from real contractors like you. Scan the code. It's completely free because it's more than just a job.
I was just going to add to that. I understand that we want to, I'm going to hire an office manager and they're going to handle my books for me. I just want to add to that. You still need a bookkeeper piece in those scenarios. And I'm going to explain why it makes sense. Okay. A bookkeeper can come in, do your reconciliations, manage your assets and liabilities, which is very hard to understand, super quickly. You ask an office manager to understand how to enter a truck loan, and the amount of time it's going to take them, you are wasting their hours. You can leverage their time so much better in the business than them trying to figure out, how do I create a journal entry to post this loan and asset to the business, So I think it's a good mindset. I think it's a team effort. You have to have somebody internal to do all your data entry, but then you do need a bookkeeper with the knowledge of your books to manage the other side of your books. And I think, Randy, you're 100% right. You add that team and it does bring accountability. So yeah, you did let this team member into your books, but your bookkeeper is going to see something that goes awry, and they're going to be able to present that to you. So if somebody does, God forbid, and I've never seen it in all of our years of coaching, all of that, someone actually go in and try to white collar somebody's business, steal from the books by moving money around. But I've never seen it not an owner, to be specific. I've never seen a staff member do those sorts of things. But a bookkeeper actually will bring accountability to the books in its entirety. And it's $1,000 a month, $1,500 a month, just to know that your books are correct and closed every single month.
Well worth that investment for sure.
Worth the investment.
Yeah, and to that point too, bookkeeping is not I've kind of gathered that there's this perception that bookkeeping is data entry. Okay, there's data entry involved in all pieces of anything administrative or accounting related. But if you have a bookkeeper who is not asking questions, not calling out things that look funny or off or different, that's a problem. Okay, then maybe you do have a data entry bookkeeper who's just pushing the data in, not asking any questions. A bookkeeper should be asking when they see something different, when they see something change, when they notice a new truck vehicle payment is being made, they need to be asking those questions hey, can I get documentation? Can I get access to this or access to that? So yeah, it goes much more into the details of the accounting than what some people might think.
I love that. And we're on the topic of, we're working up to larger businesses and maybe some of the larger challenges that we see. So now let's move into a much more established business. Maybe they're doing $5, $6, $7 million a year. They've been around 5+ years. And again, we see all the time where people come in, what are some of the common things that you see in cleanups and some of the mistakes that you see with a little bit, even a more established business?
Well, a lot of it ties back to the way that the system was set up years ago, and it's still being run on that same model. And then a lot of it also just ties into workflow. Like the business has grown and the workflow, like we've been doing things the way we've been doing things just because we've been doing them that way. And maybe it's not efficient. Maybe it's not creating those accurate results that you need. So we really do see a lot of just like misorganization of the chart of accounts, for example. And that's something that business owners aren't really looking at, but it impacts your reports. Those chart of accounts give the structure to those P&Ls and those balance sheet reports. And and then also those workflows are really important. And when I see an issue like in accounts receivable, for example, and all of the invoicing and the revenue, my first question is, who does your invoicing? What's the process? What's the timing? How many people touch that invoice before the job closes? It should be one person, not like 3 or 4 different people from different departments and a sales guy and the owner going in and making adjustments. So those are 2 of the most common things that I see in almost every single client that I touch.
Well, think about that. If you want to create a bottleneck as you scale your business, have like 6 people working the invoicing in the invoicing system. Good luck. We've come into a business doing $7 million that has no money. Where's all the money? It's out there in space, not being collected because you don't have a really dialed in invoicing system. Again, topic for another show, but invoicing and having that structured system in place is vital. And that's again, shameless plug. That's one of the specialties what we're able to do is help really systemize the back office of your business to make sure your invoicing system is super dialed in. Because think about that. Think about the impact 1 day, 2 days, 48 hours, 72 hours. Like if you're invoicing once a week, once every 2 weeks, that's a lot of time that you're wasting in creating a much longer cash conversion cycle, a much longer DSO where you're not collecting your money fast enough. The number one contributor to businesses in our industry, construction businesses failing, is cash flow. Why do you see every day? I just saw a post the other day of a big company going bankrupt with millions and millions of dollars in debt. I can assure you, if we were to be involved in that and we uncover and unpack what's going on there, a lot of it has to do with cash flow and cash conversion.
I was just going to second what Jenn said in regards to just your businesses outgrows your systems. Like we have to flex as our business grows. And so that's the finances too. I think Jenn mentioned earlier, but I do see people are like, sometimes I'll ask a business, I'm like, are you job costing? And they're like, yeah, I'm job costing. And we get in and they're like, well, I put all the bills in CRM. So it's like really an understanding of what is even any of these concepts and the language. Are we speaking even the same language in regards to that? So it's like the bigger we get, the more granular we have to get. I know that kind of bites, but that's how we keep our finger on the pulse as we get bigger and bigger and bigger. So we have to flex our systems as we grow. And that is one thing we do at the Academy. It's like, man, why do I have to do it the way Brie wants me to do it, And I'm like, man, I'm setting you guys up for this to work forever, not for it to work for the next 2 years or for 3 years, but like wherever you head, like this system will work for you.
Yeah. I heard something super profound, and I've heard this before, but it just really hit. I just got back from an amazing, business conference, and one of the speakers said something super profound. He says, we all have goals, right? We all have ambitions. Everybody listen to this. If you're listening, you're a leader. You're a leader in your space, and whether it's roofing, construction, home services, whatever it is. Hopefully, and if you tuned in for whatever the reason, hopefully you're getting some value from this. Thank you for being here. Like, subscribe, comment. We appreciate you. But we all have goals. We all have ambition. We all have vision. But here's the reality of it is. Here's the reality. We don't rise to the level of our goals. We actually fall to the level of our systems that we have in place. So you can have all the ambition and all the goals in the world, but if you don't have systems in place, you're not going to get to those goals because you're going to fall down to the level of the systems that you have in place. So this is what we're talking about, is building strong, structured systems that you can live for. I mean, the things that you learn by doing the work to build the systems to really understand finances, to understand tracking, to understand running your business by the numbers. It's not just for right now. It's not just for this month. It's not just for this quarter. These are things that you're going to learn as an entrepreneur that's going to carry on for generations in your business and in your life. Think about that. Is it worth the investment to make sure that you have good, solid people teaching you and showing you how to set this stuff up the right way? Now, shifting gears, I heard something we talked about, and there's somebody out there that heard this word and they're like, what are you talking about? Chart of accounts. We hear this all the time. And I remember I'm guilty. I ran my business for a long time before I had a clue what that even was. And honestly, every year, maybe even every quarter, Brie's looking at our chart of accounts, making adjustments and figuring out, making sure that we're categorizing things the right way. Help me. Somebody is listening to this and like, what the heck is chart of accounts? Help us understand that.
Okay, so your financial statement should tell a story. It tells a story of how your business is doing, from top to bottom, left to right. Those chart of accounts are the pieces. I always say the pieces of the puzzle. It's part of what helps to tell the story in the correct format, in the correct way. So all those categories, when you turn in a restaurant receipt, you're like, this is a meals receipt, or this was actually a networking event. It's not a meal anymore. It's actually a marketing expense. A marketing expense is one of those chart of accounts. So it's all of those individual categories that every single transaction has to go to one of them so that they fall in your report in the correct category, in the right place, the right time, all that. Brie, would you add to that?
Yeah, no, definitely. It's just your revenue, your cost of goods, your expenses, your assets, and your liabilities. And then those break down by what category they should actually sit inside of. So yeah, I remember sitting in a meeting with you, Randy, you and Mom, and you were talking about COA. And I was like, I've never been afraid to be like, business owners never be afraid to be like, what is that acronym? I do not know. Who cares if for a minute someone might think that you're not as smart as you hope that they think? But like, ask. And I remember being like, what is a COA? Like, explain it, So it's definitely one of those things but always, anytime you don't understand it, ask, get clarification, learn.
Especially talking to Brie, right? Because you make up your own sometimes.
Oh yeah, I have my own, yeah.
She speaks her own language.
I make up my own acronyms.
You gotta learn it. Yeah. So I've learned to ask a lot. Like, what are we talking about? It's okay. Like, here's the thing. I think there's something to be said about that. Let me put my leadership coach hat on. Here's the thing. If you followed a leader that like knows everything, how much respect do you have for that leader versus the leader that strives to learn, the leader that's curious, that leader that's vulnerable, the leader that knows when they make mistakes, that's learning and growing right alongside you? Which leader do you want to be around? Which leader do you want to follow? The one that knows everything, that has all the answers, even if they're wrong, that just makes it up and BS's and leads with ego, or the leader that leads with humility and vulnerability, right? So it is okay to not know what you don't know. We all don't know everything, right? And that's why you got to put yourself in the right circles. That's why you listen to shows like this, because we're learning. You're learning something you may not know about, or you may be intimidated by. And I think that's really one of the big challenges that we face, as a coach in the financial side of the business, is that so many leaders are afraid to have the conversation because it creates a sense of insecurity, because they're talking about things that a lot of times we don't really know about. We haven't learned about. We all heard you need to check your P&L, but let me ask you this. If you're watching, if you're listening to this, when was the last time you actually read your P&L and didn't just look at it and go right to the bottom? How much money am I making? Like looking down through the chart of accounts, looking at the cost of goods sold, looking at your variable expenses, looking at your fixed expenses, and really understanding the story, as Brie said, that P&L is telling you. It's okay to not know that, but it's not okay to not learn it. Mm-hmm. If you really care about being an entrepreneur and being successful in business, that is one of the things that you must learn to do, is to learn and read your P&L. Stop avoiding it, lean in and figure it out. Okay, there we go, man. It's getting real here. All right. Let's go. We're going to go a couple more things real quick, and we'll start to land the plane. Big companies. Okay, we started with little companies, and Jen, you nailed it, because it evolves. Things change rapidly. I mean, I like to ask the question when I'm interviewing somebody or trying to work with somebody. I'll ask them the question of, hey, how many roofs are you doing now? Well, I'm doing 1, 2, a couple roofs a week. The question is, what would happen to your business if you started doing 5 a day? and their face goes blank and it's everything would break. But how do we build that foundation? So let's fast forward to that company that's doing 5 a day, the big companies that are doing lots of business. And what are some key tips and key things that you still see maybe some mistakes made, or maybe some affirmations of like, to get to that level, these are the things they had to get right in order to get to that level?
Yeah, I would say I'm going to go to cash flow in regards to big business. And as you get bigger, I say big business, but I think one of the cash flow issues that we have in roofing as we get bigger is that we do large numbers, but we're small businesses.
Mm.
And I think that we forget that. So we get kind of high and mighty, and we want to, so like what you said, if you could do, I apologize, I'm a little bit sick. If you could do, you have enough volume, you have enough sales, you have enough backlog to do 10 a day. Do you do 10 a day as a big business? Do you understand what 10 a day how 10 a day would affect your books? Do you understand how 10 a day would affect your cash? And I think that is the biggest challenge with as companies get bigger, is that we say, okay, well, now we have money just to throw away. So
Let's just light it on fire.
Light it on fire. We can spend it all the way that we want to spend it. And we don't keep those controls around, and we don't make intentional decisions around our growth. And so I think it's more important than ever to have really, really clean set of books, really, really clean finances, and then understand the impact of the volume on that financial system structure and the impact of the cash. It's a lot of money in and a lot of money out.
Yeah, if you're looking at your bank account and making decisions on, yeah, let's go for it. Let's build 10 roofs because we got $500,000 in the bank right now. We're good. Well, like in 5 days, like 200 of that's going to go away because you have to pay your suppliers, or you're still paying your suppliers on pickup, like each individual swiping the card. Like we really want to see you anchoring and like utilizing those nets from the suppliers, because the bigger you get, the more willing those suppliers are to extend lines of credit to you. Use that. You need to hold on to your cash as long as possible, because you have money coming in and money going out every single day. And every time you build a job, that's another big chunk of money going out before you're going to get paid.
Yeah. Well, if you think about it, right? And this isn't specific to numbers per se. Every company's a little bit different, markets are different. But if you think about it, let's just say you're building a project, roofing, whatever, construction project. You're operating about, after commissions, maybe you got about 25%, just for the sake of numbers, 25%, gross profit at the end. That's how you operate your business off of that, right? Let's just say that. And you take a 50% deposit, but there's still 25% of that project that you're funding. Where's that money coming from? You got to think of it. You're roofing specific, or restoration, or home services. Like, we have to be the sales rep. We got to be the coordinator. We got to be the bank. We got to be, the collections agency. Like, we got to be all these things. But like, the reality of it is, you're funding, just assume you're funding about 25% of every project you sell. If you oversell and overproduce those projects, that portion that you're funding, and if you don't collect it fast enough, what's going to happen to your business? What's going to happen to your cash flow? You're going to get upside down. And then what's going to happen is, you're now wasting money on interest. You're now pushing people out and creating a negative environment. This first time you have to not pay a vendor, or not pay somebody, or hold off, or adjust that because you don't have the cash, but it's there. It's in AR. It's all there. It's on paper. I got the money. But when you look at your account, it's not there. Right. So here's the biggest takeaway and the biggest lesson I've learned with this team, working with them. And then they have coaches too. We all have coaches. We all have people that we learn from as well. And this is not just a pitch to say, call me, let me coach you, or call us, let us coach you. I don't care who you are. If you're an entrepreneur in business, if you're a leader in business, and you're committed to mastering your craft, to mastering what you're doing, and mastering your ability to lead others, you need a coach. Imagine a basketball team with no coach, right? Every single person, if you're in business, you need a coach, whether it's me, whether it's the TRA, or somebody else, anybody else. There's amazing coaches out there. Look for it. You need it. I can assure you the amount of value you're going to get is 10x what you invest in that. So they have amazing people behind them that are helping them, coach them as well to learn these things. But at the end of the day, let me simplify this for you as we wrap the show up. our responsibility is to know how much cash we have, how much cash is coming in, how much cash is going out, and how much we're going to have left over. And somebody out there, unfortunately, there's probably a lot of us out there, if I were to ask you that question right now, does it make your stomach churn and make you sick to your stomach because you don't know those numbers? Learn that. Take that and do what it takes to get yourself in a position where you can answer that. If you can answer that question, how much do I have coming in? How much do I have going out? How much do I have, expected? And what's going to be left over? And at the end of the day, if you can get through a month and all your expenses are paid and you got $1, you got $10 left over, that was a good month. You did good, faithful servant. Okay? Because here's the last piece here. And this is a call out because there's a lot of us that have this misconception. First and foremost, with faith, like it ain't your business. It's God's business. First off, it ain't your business. It ain't my business. I have multiple companies. They are not mine. I am just a steward. I am responsible to make those businesses work and operate for the kingdom of God. Okay. That aside, the misconception that my business bank account is my money, it's not. It is, you have a fiduciary responsibility with that money. So many people have these businesses and they just start using their personal or their business bank account like it's a personal checking account. They attach their Amazon accounts to it. They start paying for personal expenses, personal trips, and all these things and trying to manipulate the system. And then all of a sudden they go broke. Separate the two. Live within your means, build wealth, own your responsibility as a leader and a fiduciary for your business. And I guarantee, and give all the glory to God, and I guarantee your life will improve in all aspects. Okay. Money, they say, what does it say? Money is the root of all evil. The love of money is the root of all evil. Building wealth is an amazing thing because you can give it back and you can help serve others. But if you're selfish and you're just making money just to make money so you can peacock and spread that money around and show off your new truck, you're doing it for the wrong reasons. So figure out these things, ask yourself the tough questions. And I hope you learned something and hope you're blessed from today. Give me some closing thoughts here, Jen, and then I'm going to wrap us up.
Yeah, I'm excited to be involved with TRA because it really does give me a lot of joy and a lot of pride to be able to help business owners, like from a supporting position. When I look at all these business owners, I know that they didn't go into business to stare at their spreadsheets and their reports and all this stuff. Like it's part of the job, but they started their business probably because they're good at leading people or they're good at building or they're good at networking. They have their skills, right? And I want to come in and I want to support from the financial side of that and offer that to them. So I'm just really grateful to be here and I'm excited for what's to come. And I'm really glad that you asked me to come on the show today. I really appreciate it.
Thank you for being here, Brie. And stay tuned if you're listening. I have a gift for you. So you're going to want to keep listening.
I would say just to close out, just the word intentionality comes to mind to me. So if you aren't being intentional about your finances or not being intentional about your cash flow, I would encourage you, like today's the day to start. Make that third portion of your business just as important as your sales and your fulfillment. And like what Randy said, I love that so much. Can I add to it a little bit? Randy
Absolutely.
said, personal expenses. Your businesses are not here to help remodel your personal home. I just want to say that. And the companies that I've seen people do that in, it's really, really, really damaging to the cash flow. So I just want to add that on top of the personal expenses things. Your business is not meant to be your own personal remodel business for your personal house. So so finances, they're important. And
awesome. All right. We've made it this far. We're wrapping this thing up. As I just kind of alluded to, we have a gift for you and it's going to be in the link or it's going to be in the, we'll put it in the comments. We'll put it, whether you're listening online or you're listening on, whatever the podcast software is. And if you like to see our pretty faces, their pretty faces and my face, it's on YouTube. So go make sure you're on YouTube. You subscribe to The Roofing Academy on YouTube. And then we're on all the podcasting platforms. But we actually, these two brilliant young ladies and Kylisha, our executive, member success manager, they came together and they built a health assessment for your finances. So we're going to give that to you. It's free. You just click the link. You'll take a little assessment and it's going to kind of help paint a picture of Maybe you're crushing it and you're documenting everything and tracking everything the right way. Maybe you need some work, but we're going to give that to you. Click the link below, and you can take the financial health assessment for your roofing business and see where you stand. And it is okay. You're on a journey to learn, to grow, to get better, and to be the best leader you can be. So thank you for joining us. Thanks, Jen. Thanks, Brie. Take care, everybody, and God bless.